So, good news that we didn't fall that low. The lowest point from the top, which was like almost $7,600, was $800 lower. And after that, we did correct it upwards, and now the price is consolidating around $7,000. Moreover, there is a trend line which held, and now the price is above that trend line, which also gives us a bit of the confidence. And I would like to stress the volume profile over here. So you see there was a lot of the volume at this drop, and one may say that a lot of the people who were buying on the way up now sold, so there is no more reason to hold the price at this level because they would want to buy lower, so there is a chance that the price will continue to fall. But in fact, this is a double-edged sword, this volume distributions, and there are always people on the other side of the deal, so despite some of them were selling, another part were buying. And again, considering the fact that the price doesn't go directly lower, so we see actually a higher low over here, it seems like we are not in the bad shape. And what I was going to show you today is indicator called accumulation distribution indicator, and basically it includes the volume into the formula defining the price behavior, and in this way it is sort of estimating the supply and demand in the market. Here is the formula. Basically it is the previous value plus the new value at a certain point of time, and this value is calculated by this ratio. In the numerator we have two deltas. First is the closing price minus the price at the low, and here we have the highest price minus closing price. And in the denominator we have the delta between the high and low of the price. This is multiplied by the volume for this period. So the higher the volume, the more the trend is supported by this volume, which we can see by the behavior of the indicator. In fact, if you look at the longer time frame, let's say a few years, and you will consider how the bottoms and tops were matched by this indicator, you would see that actually it was pretty nice. For example, here was the previous bottom in 2015 January, and then we have accumulation phase, and then it was up. So here was the top of the price, and here was another bottom somewhere around here. Moreover, you can make a trend line which actually could go pretty much from 2012, and you see it works out pretty well through the whole history of the price of Bitcoin evolution. And this is actually also another fact about the bottoming of the price in December. So we see that this indicator also supports this idea. On a shorter time scale though, you may see, for example, somewhere in the recent price action around here, the price went from the very bottom to something like 4,100, and then we had a long period of decline in the price, especially in this region. But at the same time, somewhere from here, you see that the 80 indicator was going up instead of going down as the price went. So this was a divergence of the price to this indicator, and eventually we saw the uptrend in the price happening, and at this point it was supported at the rise of this indicator as well. So what does it tell us at the recent price action? So it was going upwards, and instead of having a dramatic fall, as we can see because of this volume, it actually held pretty strong. For example, this high of the price and this high of the price had a big difference, but for the indicator they are pretty much at the same level. So it seems like this indicator shows us the recovery of the price action over this period of time, and also gives us a hope that we will continue to go high and will not fall below this trend line. But while this is a relatively bullish indicator, I was going to show you another one which is called CCI, or Commodity Channel Index. And what it does, it actually just calculates the relative change in the price comparing to the average and identifying overbought and oversold levels. Here is again the formula: the typical price, which is the average between high, low and close of the price, minus 20 period SMA of typical price, and also there's a coefficient which can be actually pretty much different, but the only thing which it does is holding the distribution of this indicator within the certain area, like between 100 and minus 100. So at the moment, most of the time indicator is within this zone, and if it is very high, then we may expect the drop. For example, in the weekly time frame, you can see that it's over here and here. Every time we see the quite high value of CCI, you would have the correction in the price eventually. And now again, returning to our low in 2015, you can see that in 2018 the low of this indicator was much lower. It actually returned recently back quite fast and even reached the very high point, and at this point you would expect the correction, and it actually was some correction. But here is the thing which I was going to mention. This is probably one of the few indicators which shows the bearish divergence in the price on the weekly time frame. So you can see we have the higher high here but lower high on the indicator. And although you would think that we are still in the bullish territory and it doesn't go that low, so you wouldn't expect the price to go much lower, but divergence exists. The only hope for that is that if you look at the daily time frame, then the most of this divergence actually happened between this peak and this peak, and then we actually saw this decrease in the price. It was also supported, I think, by the TD sequential and other indicators, so it's not that surprising that we see this divergence and finally the dip in the price. But even now, if you'll compare these peaks, this one was very high comparing to this one. So as opposed to AD indicator, you would see that CCI looks a bit more bearish. But again, my point here is that if you pick something which is really against all of the other factors, then it's not necessary to be correct. At least you shall not build your trading strategy on that. And by the way, if you also look at the monthly time frame, then you will see one more confirmation of the reversal of the trend in general. This is a convergence with the price, not a divergence, indicating that we're actually going to the pretty much bullish territory towards 100 mark, and at this moment it is actually right around zero level, crossing it upwards. Finally, I was going to mention the Bitcoin dominance. As you probably also follow this, we have a little bit decline in the dominance recently, so we don't have the continuation of this crazy increase in Bitcoin dominance. So maybe altcoins are starting to return their position. For example, Binance Coin showed a pretty over rally recently with a nice volume over here. I may mention also Walton Chain and even XRP. You can see the volume at this area is really high compared to the previous history. So you may think that somewhere around here we can see the reversal. Of course, not a financial advice to buy, guys, but looks promising to me. So maybe we will not see anything like 65 or 70% dominance as many people actually are expecting to see in the near future. So if Bitcoin will continue to consolidate in this area with a very little change in the price, we may see the return of altcoins, which many of us want due to the lot of the decrease in the price of most of the altcoins recently. Okay, this is it for today. I hope it was useful. Thank you for watching.